Okay, we're going to take a look at Chapter 6-3A, the balance sheet from a partial worksheet. So in your textbook, you can find 3A to follow along. You have a partial worksheet there that just has the income statement and the balance sheet, our last two sets of columns on our worksheet, and it has the balances for each of those accounts. So in creating a balance sheet, we're only going to use assets, liabilities, and owner's equity because those are the only items that go on the balance sheet. Assets are listed first, liabilities are listed second, and then owner's equity is listed last. And you'll notice that this looks a little bit different from balance sheets that you have created previously. This is what we actually call a classified balance sheet. So in a classified balance sheet, simply we're just taking the categories that we already have and we're further categorizing those. So just instead of having assets, we now have current assets, which are all of our assets that can be turned into cash within a year. We have property, plant, and equipment, which are all of our assets that can be depreciated. And then under liabilities, we have current liabilities, and later on in future accounting courses, you'll learn about other types of liabilities. So we list all of our current assets in the order of liquidity. So we list cash, accounts receivable, supplies, and prepaid insurance. And those amounts are taken directly off the partial worksheet in your book. And then we total it up. And then the newest thing here is under property, plant, and equipment, our office equipment can be depreciated. So remember when we learned depreciation, office equipment is always recorded at its cost. And then we less the accumulated depreciation, which is the balance of the total amount that we have accumulated so far, and we get our carrying value or our book value on the books. So even though we paid $3,500 for it, we've depreciated or allocated part of that cost. And so now it's worth $3,300 on our books, and we add that together and it gives us our total assets. The balance of our accounts payable and wages payable are recorded, and then we get a total. And then we have to calculate our capital account, because if you look in the book, it says our capital is $4,100. So what you know about our capital account is that you have to add in any net income. So remember on the worksheet, your net income is there on line 23, so 4,100 plus the 2,220, and then we subtract out the drawing, which was 900, and that's where you get the new ending balance. Again, beginning capital plus net income minus drawing. And so then, as always, a balance sheet represents the accounting equation, and these two numbers must equal.